Hello, hello. Welcome back to another episode of Crush Your Money Goals. I am here with my good friend Tony, and we're going to talk about a topic that is very near and dear to my heart in the sense of I wish more people would spend time on this. And he so graciously invited me to discuss this topic with him because he is an expert. And so let's welcome our new friend Tony. Hello.
Hey, Bernadette, thanks for having me on. Excited to be here with you.
Awesome. And so I would love for you to share a little bit of background on who you are. And you have this thing called the Get Ready Money Club. And I'd love for you to share more about what that is.
All right, fantastic. My journey started many years ago. I started as a life insurance agent, and I quickly saw that people didn't understand their life insurance. So I got a special license from the state of California that allowed me to do fee-based life insurance consulting, basically to charge a fee to review in-force life insurance policies. So over the next few years, I consulted with financial planners, trust officers, litigation attorneys, ended up spending some time on the California Department of Insurance Curriculum Board, and I learned that all across the spectrum, people didn't understand their life insurance or disability insurance, and that included the agents who were selling it, the consumers who were buying it, the regulators who were regulating it, or even the insurance companies who were issuing the policies. So
Whoa.
I became very interested in financial education, which eventually led me to create the Get Ready Money Club, which is a way where I can give back by helping people with one simple financial action item per week. And some of it is based upon insurance, but the other part of it is that insurance fits into so many other things that everything is intertwined. And it was the other thing that I found is that even with a lot of financial planners, they weren't including insurance as part of their planning. So it was also to show how everything fits together. So that's my passion, and that's what I'm up to right now.
I love that. And so you mentioned this, which scared me a little bit, is that you just said that even the insurance agents who are selling the insurance and sometimes the brokers, but of course, especially the consumer, didn't have a real understanding of how insurance fits into people's overall plans. And so I have often found, even from my own coaching, that insurance is often overlooked as part of personal finance conversations. Why do you think is the talk about insurance such a crucial part of having a really good financial strategy as an individual?
Insurance is your safety net. So before you do anything is usually you check your safety plan. We think about maybe having a fire extinguisher around the house or our supplies in case there's an evacuation, whatever it is. We talk about an emergency fund, which is really a form of insurance if something goes bad. It's insurance in case we need to pay for car repairs, unforeseen medical bills. So insurance is really that safety net, but it's one of those things we overlook because we get distracted by certain products and we think about the products first. Like, for example, Bitcoin is something I love to mention as an example because a lot of people go, hey, should I buy Bitcoin or not? But the question really is, does Bitcoin fit your goals? And is it offset by the insurance? So with insurance, we don't think about it with our car insurance. Everybody goes, I have a car, I'm going to have insurance. And getting a home, buying a home, lenders require homeowners insurance. And so if you think about it, okay, why are lenders requiring insurance? Because they know that it's something that's necessary because things happen. But on a personal side of things, with life insurance, disability insurance, even long-term care insurance, we don't think about that same backup, even though there's other areas where we don't even think twice about having insurance.
So, on that note, then, what is one common insurance myth that you would love to dispel in the present time?
Insurance is not an investment. You can't be your own banker. Is
Thank you for saying
That's
it.
all it is. I have a whole podcast episode I did with a friend of mine where that's all we talk about. But the thing is, when you buy an insurance policy, the first thing it says on the insurance policy is this is an insurance contract. It doesn't say anywhere that it's an investment policy. And the biggest part that people miss is they get The cash value does grow on a tax-deferred basis. However, they don't tell you that there's surrender charges for up to 15 to 16 years. The other thing that they don't tell you is that you're always going to be paying for the cost of insurance. And if you're 25 years old and you're just starting out, you have no kids, no family, no dependents, what do you need $1 million of life insurance for? You're better off going into something, and this is not investment advice, but like an exchange traded fund, which has low expense charges, instead of an insurance policy that has high cost of insurance because you're paying for an insurance policy and that locks up your money for 15 to 16 years, which is a long time. That's the biggest myth that I'm trying to break.
Thank you. So I am so frustrated by this in that I have coached at least a dozen single women with no kids who have been sold life insurance policies, and they were told, or they were led to believe by these insurance agents, that it was an investment. And so when I walked it through them, and I genuinely asked them, so who are you trying to insure? Because you don't have kids, so who's the beneficiary of your policy here? And I think that the other challenge that I often have, which is more of a philosophical one, is like, why are we more worried about dying than are worried about living in the present and making sure that we're taken care of in the present? And so I'm really glad that you're sharing that. And so let's talk about life insurance. When it comes to life insurance, there is always this debate between term and whole life. So what's your take on that? And how should people decide what's right for them?
In my mind, term life insurance is pretty much the answer for most people. 90% plus of cases. So what people need to think about is, instead of, and this was the example I used with Bitcoin earlier, is they need to think about their goals first and what they're trying to accomplish rather than the product. Because the question shouldn't be, do I need term or whole life insurance? The question should be, what am I actually trying to accomplish? And so for most people, when they're buying life insurance, it's for a specific purpose. They're trying to protect their family. They're trying to have money for their kids in the event something should happen for them. But when you think about your kids, it's usually a finite need where you need life insurance for them. It's 20 years, maybe it's 25 years. You want to make sure there's coverage for them through their college years. And when you're thinking about providing coverage for a spouse, domestic partner, that other person who may be dependent upon you, or you're splitting income, is usually that's for a set period of years, as well as because you have to think about it over a 30-year period. Hopefully you're accumulating enough other assets to offset the need for life insurance. So you get to be age 65, you've accumulated $1 million or hopefully $2 million in your retirement plan and other assets. What do you need a $500,000 life insurance policy for at that time? Is it going to make a difference? Is it necessary? So it gets back to thinking about your goals, but that's where the whole get ready money concept came in, is that you have to think about it. It's not only life insurance. What else is going on with my financial plan? If I'm saving money and I have a 401k, IRA, whatever, you're going to have other assets. That's the thing, is that I think people should think about, is what are they trying to accomplish? And then think about what product is going to help them reach their goals.
I so appreciate that. And so I'm going to throw a curveball at you because initially I was going to ask you, what are the different types of insurance that we need at 20 versus 30 versus 40? But what I found is that a lot of what we're missing in personal finance are like some real tangible examples for people to absorb this information, because we could like Google that. So let me use myself as a case study. What kind of insurance I might need? I might ask you like what questions I should be asking. So to use myself as a case study, right, is I just turned 40, like literally last week. My husband is 43. We don't have kids. We don't plan on having kids. We are debt free. We are at $1.9 million of net worth. About half of that is in the stock market. The other half of it is sitting in cash and other like tangible assets. And I am constantly being prospected by financial advisors, and because my information is out on the internet that I have money, right? So what kinds of questions should I be asking myself at this juncture in my career? And for me, my financial independence number, I had calculated it at around 1.5. So I'm like at the point of like retirement. So what questions should I be asking myself in order to broach the topic of what other insurances should I be looking at this point?
The question that it should come back to is it's a little bit about your goals, but it's about like what happens if? What happens if you pass away? And congratulations on your financial independence. That's amazing. At your age, and happy birthday, of course. But the question is, if something happens to you, will your husband be able to maintain his current standard of living if in that event? Is he making an income? Are your savings enough to generate an income for him that he would be able to pay for your housing, whether it's a mortgage, rent, whatever it is, and the other costs? If there's enough money there with his income and with your assets and his assets, then there is no need for life insurance. But that's where it's an issue of considering those other things. And I'm glad you talked about liquidity, because that's the other thing is sometimes I'd recommend to somebody in your situation to buy a small term life insurance policy to provide some liquidity. But if you already have some assets that can be cash ready in the event something happens to you, is let's say your husband has to take 3 months off to deal with final expenses, whatever, which sometimes that can take a little while to deal with things, is if you have the liquid assets and you don't have a need for life insurance. So it's really weighing those factors of what would somebody need if something were to happen to you. And that gets into that whole risk protection, thinking about your safety plan, because you buy auto insurance. And the reason I keep coming back to auto insurance is because pretty much everybody has an auto insurance policy. You buy it because if I get into an accident, I want to make sure there's cash available to pay for repairs, to pay for a replacement car, to pay for any liability if I hit someone else. But it's all about what if. And that's a question you should come back to with your life insurance. What, and if there's no need, there's no need.
Mm-hmm. Thank you. That's helpful. And I say this because my husband and I have had this conversation, whereas if one or the other, God forbid, were to pass away, the other one would be fine because we each make our own income and we have structured our lifestyles such that we could survive off of one of our incomes. We don't need both of our incomes in order to maintain our current lifestyle. And so it's always been fascinating to me when people like have come to me and say, you need life insurance. I'm like, do I though? Really? And actually, I joke with my husband that he would be better off if I were to pass away, only because I wouldn't be spending so much money on shoes and like K-pop concerts. And so there'd actually be more money probably available from our incomes. Another thing that I would love for you to just talk about briefly is disability insurance, because I think it's something that most people really don't understand. And is there a particular type of individual that should be looking at disability insurance?
Disability insurance is the most overlooked area of the financial planning world, and it's probably the most necessary type of insurance because, again, it's that what if. Disability insurance is not about protecting against, it is about protecting against a disability, but it's really about protecting your income. So when you think about auto insurance, you think about, well, it's about my car and it's about protecting my other assets. It's about providing liquidity. And with disability insurance, it's about protecting your income. So if you're dependent upon your income, so for the average person, if they were to lose their income, they would need some other cash flow or they would be hurting in significant ways because most of us don't have enough money saved up to take care of us for 20 or 30 years. So with disability insurance, where it does get confusing is you have short-term disability insurance, which can be provided by an employer, sometimes your state insurance programs, and that usually covers you from anywhere from 30 days to 90 days to 180 days, but that's it. Long-term disability insurance fills in the gap for the rest of the way. And the big thing people should understand about that is it also covers an individual disability insurance policy also covers partial disabilities. So it can provide a rehabilitation benefit. So let's say you break your leg, and maybe breaking a leg isn't the right example. Let's say you have a heart attack where you're disabled you're not able to work for, let's say, 6 months while you go through all the recovery, while your body builds back up and everything else. So you get a disability benefit for that period. But then you have to go to rehab, let's say. So the disability insurance policy will help pay a rehabilitation benefit towards that. Then let's say you're only able to work 3 days a week because you're more at risk, so you need to lower your stress. So you can only work 3 days a week. So it pays a partial disability benefit. So it will pay you the equivalent to replace that 2 days a week that you're not working. So there's a lot more about it. So it really replaces the amount of income that's lost in the event of a partial or total disability. So again, it's that if I were to lose my income, would that have an impact? Now, in your situation, disability insurance really wouldn't make sense unless you want to have a little bit of extra cash in the event something happened, the liquidity. But again, if you have sufficient liquidity in your assets, then it doesn't really matter because you've already hit your financial independence number. So you don't need to protect your income. It becomes a preferential item where you go, okay, the leverage really makes good sense for me to buy a disability insurance policy, but it's not really important. But for most people where they're dependent upon their income, it's important. And the other thing I mentioned is group disability insurance, because that's something where most employees, they get their annual enrollment for their employee benefits and they have no idea what to choose. So the thing to think about is that it replaces a certain percentage of your income. Usually group LTD is 50 to 60% of your income. You can have the benefit paid on a pre-tax basis or an after-tax basis. So you have to think about that. You're going to get more money if you're paid on an after-tax basis. But you have to think about with group long-term disability is, does it cover bonuses? Does it cover advanced commission? So you have to think about with any type of insurance, what is actually covered? And is it enough coverage? Group long-term disability insurance can sometimes, it always has a cap on the amount of income. So it might be $6,000 a month, it might be $10,000 a month. So where you're living, you may say, oh, that isn't enough coverage. So it's really thinking about, again, what if something happens? Can I take care of that without needing an extra source of income?
Okay, so that answered a lot of my questions which is great because I have a lot of clients who are either entrepreneurs or high earners. And so I love that you talked about this topic because disability insurance almost never comes up. And I have had cases of clients who did not have enough coverage on that and then had to go out of the workforce for a disability. So that is super helpful. And in the space of entrepreneurs, are there any unique strategies that entrepreneurs should consider, whether or not they're a high earner?
If you're an entrepreneur, again, disability insurance is really critical. But there are certain types of disability insurance policies that take care of the business. So let's say you have a disability and you're going to be out for a year for some reason. But you have a couple of employees, you have office space, you have all these expenses that you want to keep going. Or, you're committed on a lease. So you can buy a disability insurance policy for that event that just pays your business expenses in the event of a disability. You can buy a disability insurance policy on a partner. So let's say you're in a partnership, you can buy disability insurance to fund a buy-sell agreement. So that's important. In terms of life insurance, it really depends. Again, there's some business uses that entrepreneurs should think about. There's key person life insurance. So let's say you're in a fintech startup and your partner is the tech person. So, and they pass away. So you're going to need to replace a new tech person, or you're going to need to hire a tech team. And they may not work for free like a founder does, or for peanuts like a founder does. You can get some cash for that. So you need to think about that as a strategy. Are you running a business? What if something happens in a business situation, again, with a partnership, is if somebody passes away, the share of the business goes to the spouse in a lot of circumstances, but the spouse can't really step in and run the business. So you need to have cash to buy out the spouse to continue the business because the spouse is going to want the income, which makes sense because that's their share of the business. Those are some of the situations where it really makes sense. And getting back to the disability insurance, especially if you have clients who are in technology where a lot of their compensation is in bonuses, bonuses are not usually covered under long-term disability insurance through employers. So you have to make sure you're insuring your full compensation package, especially if you're dependent upon it, because a lot of us are dependent upon that annual bonus we receive from an employer. So that's where you have to think about, if you're an entrepreneur, is what are my risks? What if something happens? What if this event happens? What if I become disabled? What if I die? Do I need insurance to cover those things? And then for just regular life insurance planning needs is, do I have liquidity? Like, I've worked with clients who have substantial real estate holdings, but 90% of their assets are tied up in real estate. And that gets back to the liquidity question that you mentioned, is they may want to wait 2 or 3 years to sell their real estate because they don't want to sell into a down market. So then they need life insurance to provide liquidity to their estate. So it becomes a question of, is liquidity needed as well?
Such a wealth of knowledge here. Okay, and by the way, y'all, I have played these scenarios in my brain because I watch way too many Korean dramas where someone always inevitably falls into a coma for some undetermined amount of time. And so in my brain, I think that the only thing that will ever happen to me is that I will get bopped on the head and go into a K-drama coma. And so my husband and I have had this conversation where it was basically like, right now, Crush Your Money Goals is me. If I don't exist, really, Crush Your Money Goals probably won't exist either. And so we've had these conversations of, what do we need to put in place? And so while yes, insurance is one way to cover those things, I always go back to my entrepreneurs. Right now, I run an accelerator program for 10 different entrepreneurs. And what we're working on are all these plans and contingency processes such that the business could run itself at some point without you having to push the buttons every day. And so insurance is definitely one way to go about that. But an even better insurance on your business is to make sure that your processes can run without you. Yeah. Okay, so let's shift gears here to my least favorite topic right now, because I've posted about this on the internet lately, my frustration with the healthcare system and health insurance in the US. And so I have found, particularly, there's a couple of things. There's a lot of my clients who get into debt, not because they're irresponsible, not because they were just spending money at the mall. A lot of personal finance will have you believe it's because one major health event happened and it ruined their finances. And when it comes to health insurance, are there some smart ways to maximize coverage while keeping costs low? What's your take on how people can navigate the healthcare insurance industry now, especially given some of the current events that we've had in the health insurance space?
So there's two different avenues for people to think about. Is, let's talk about group health insurance, which is typically through an employer. Is the biggest thing that I've seen with open enrollment is that employees just check the box for the same thing they had the year before without thinking about it. And what happens is, a lot of times people will say, okay, I'm going to do the one with the lowest premium without thinking about the impact. And that's where people run into medical debt, because it's great, you're getting the lowest premium, but you have really high what's called copays, which is your percentage of the insurance that you have to pay for, let's say, every doctor's visit or for a procedure. And those can get really high on what are called high deductible plans. And high deductible is also something that you have to pay out of pocket every year. So let's say you have a deductible plan of $5,000 a year. That means the first $5,000 of medical expenses for the year are paid out of pocket. So the insurance doesn't kick in until you've paid your deductible. And then once you've paid your deductible, is you have that coinsurance or co-payment that needs to be paid as well. So let's say you have a major event, you have a $10,000 deductible. Let's say you have $50,000 of medical bills, and you have a deductible of $10,000. So first you're out the $10,000, and then you have a 20% copay. So for that next $40,000, you have to pay 20% of it out of pocket. So that's what, $8,000? Please don't check my math. I'm just think it's $8,000. Mm-hmm. But all of a sudden, you're $18,000. because you took the lowest, which is perfectly fine, but you have to understand that there's a trade-off. Now, if you take a plan that has a $500 deductible, a 5% copay, and copays are only up to a certain amount of limit, but we won't get into that. Maybe once you hit 50,000 of expenses, you don't have to pay the copay. But in that same event, you have $1,000 or $500 deductible. You have a 5% copay. So in that same $50,000 event, you're out the $500 for the deductible, and then you're out 5% of the remaining $49,000. So, that comes to another $4,500. So you're at $5,000 as compared to $18,000. So again, it's a consideration of what if. How much coverage do I need? How much can I self-insure? Now, somebody like you who is financially independent or close to financial independence, you may say, okay, I'm willing to take that risk and be open to paying that extra $18,000 in case of a health event out of pocket. Or you may say, I want to transfer that risk to an insurance company. So that's a big thing. I do have a worksheet that people can my website on how to figure out their health insurance deductible, because you have to take into account, okay, how many times do I go see a doctor? How much do I spend per month on prescription medications? And that's the other big thing. You have to make sure that your medical services are part of your network. So is your doctor in network or out of network? If your doctor is in network, it's a lot less for you to go see that doctor. You're going to pay higher charges for an out-of-network doctor. And the same thing if your medication is what's called the insurance company's formulary. And those change every year. So you have to continue to make sure your doctors are in network. You have to make sure your medications are in the insurance company's approved formulary. So it's one of those things where you have to put in a little bit of work to ensure that everything is covered at the best possible rate. Now, if you're in the individual marketplace, the same things apply, except unfortunately, they're more expensive. And right now, if you buy through, depending on your state, some states have their own healthcare exchanges, some states work through healthcare.gov, is you get a subsidy from the government. And that's where it's going to get scary, is we don't know if the current government is going to keep paying those subsidies. So you have to plan out, like, okay, what does this really cost? Now, getting back to your entrepreneurs, that's a huge concern for somebody leaving their employer where the employer pays possibly a really high percentage of their health care, where they have to go out on their own. Now, to give you an example, is my wife and I were thinking about, because my wife's thinking about early retirement. We're older than you are, but we'd be paying $1,000 a month as a family for health insurance. And if the subsidies go away, it would be up to $2,000 a month. So those are some of the things. I hope I didn't cover too much.
Oh, that was great.
But
yeah.
Oh, okay, fantastic.
Yeah, and that's a real-time conversation my husband and I are having personally. Is right now we're under his employer's health insurance and have been, and that's the only reason that we've had him stay at his job, because he started to do more work in our business where I could probably supplement his income from there. But even just the thought of it for me has been really scary, because one, when I was in my 20s, I had a really severe kidney stone and ended up going to the hospital for it and having to get it surgically removed, such that at the time I had a $10,000 deductible. So I had a $10,000 bill as a 20-something-year-old who didn't necessarily have a lot of savings. It drained my entire savings. And so ever since then, I've always kept at least the amount of what I have as a deductible in my health insurance as liquid cash in case that were to happen again. And more recently, and I've shared about this on social media, I've had such a hard time navigating the healthcare system recently because I've had some chronic conditions that I have to manage. And so even with a low deductible plan that I've had, my health insurance, for example, has my husband's company, they switched carriers from Cigna to Blue Cross Blue Shield. And Blue Cross Blue Shield is coming back just because they're the new carrier, saying, we don't believe any of your previous diagnoses. You're going to have to reprove to us that you need these medications, even though I've been on these medications consistently for the last 3 years. And they're saying, no, we don't want to cover it. And so it's been incredibly frustrating. And so I feel for people who are not financially independent, like push comes to shove, if I have to, then I will have to pay out of pocket for these medications. But it's partially why I focus so heavily on my financial freedom plan, because I knew that I have a family history of kidney disease and these other chronic conditions that I would have to. The system's going to try to find their money one way or the other. So you sharing these tips and also acknowledging that many people are afraid to leave their jobs or to lose their jobs because our jobs are often tied with healthcare insurance is definitely a challenge that a lot of people are facing right now. So thank you for that insight. All right, a couple more questions here, because I am learning so much. Is there any particular trend in 2025 in the insurance industry that you think would actually be of benefit to everyday consumers? Is there anything going in the right direction in the insurance industry?
I think with the rise of financial literacy, with programs like yours and some of the work that I'm doing, is that people are starting to think about what they want rather than having products pushed to them. And you talk about that as an example, like with yourself, is that people are pushing products at you, where a lot of people, and this is, what I like about your program, it's goals. You're completely driven by goals first. And I know you also get into mindset, and mindset is hugely important. That's really that we have to change that conversation to, what do I want? What am I trying to do? What product is going to help me achieve that goal, instead of saying, okay, here's a whole life insurance policy. Should I buy it or not? Who knows? If you don't know what your goal is and you don't know how you want to reach your goal, are you risk averse? Are you willing to take on more risk? You can't really make that decision. So that's the biggest trend that I see. It's not necessarily an insurance trend. It's a financial literacy trend, is that people are hopefully learning to ask the right questions. And we can look at other people who've created large financial literacy communities. FinCon has, I don't know how many creators out there talking about financial literacy, talking about financial education, but talking about thinking. And that's my motto, is let's change the way we think about money. And it's that change that we're making that I think is a positive trend, is because if we can take control as consumers, and this is the biggest thing I'd recommend for people, is be a little curious. Ask questions like when we talked about the whole life insurance, is what am I buying? Am I really getting what I think I'm buying? Because we may ask those questions when we buy a car. Now, buying a car is an unpleasant experience, but so is buying life insurance. But when we buy a car, we do some research online. Usually we think about, okay, do I want electric? Do I want hybrid? Whatever. We go through a checklist. And so that's the other trend that I'm seeing with insurance, is that there are better resources for people to arm themselves and to become a little educated.
I love that. Just to wrap up, if someone were listening today, right now, if you could summarize, what is one action that they could take today, not tomorrow, not next week, not when they're feeling inspired, today, that would help them improve their prospects towards financial freedom?
Is to be curious, to adopt the habit of being curious and asking questions. Is we're not curious enough when it comes to our money. We're willing to take the word of, like with life insurance, for example, is a lot of it is sold by friends and family. And then those people are out of the business for 5 years, is once they've sold policies to all their family and friends, because we don't ask the question. And unfortunately, the hugest problem in financial services is we don't even know what questions to ask. So that's the thing that I urge people, is to do some research, find out what questions to ask. Because let's say you have a medical condition, you go in to see your doctor, and it's maybe a knee replacement. You're going to ask some questions about the knee replacement. How long is my recovery time? Will I be hospitalized? How much is this going to cost you? Whatever. But you're going to ask questions. And we know to ask questions when we see our doctor. And doctors encourage us, do you have any questions about this procedure? What do you want to know about it? But doctors don't expect you to know everything about knee procedures, where the financial services industry has, though they want you to know everything about a whole life insurance policy before you buy it, but that doesn't matter. If you don't know the right questions to ask, you're not going to get the right answer. So that would be my huge tip for people, is to be curious, and to ask questions.
I love that. So, if people are curious to learn more about you, where can they find you and learn more about the Get Ready Money Club?
They can go to my website, tonysteuer.com, or check me out. I'm very active on LinkedIn, which is where we connected. And there's information there on how to sign up for the Get Ready Money Club. It's free. And I have a lot of great resources in a newsletter where people can do one simple weekly action item, but it's all about helping people be curious and asking questions. I don't give people answers. I give them things to think about.
I love that. I love that so much. And I follow Tony on LinkedIn. He always has really great tips and things for us to think about. As someone I consider myself to be a very curious person in the sense of I don't know all the answers. And I always tell my clients the reason that your money plan is probably not going accordingly to what you'd hope for is because you're not asking the right questions. So I am so grateful for you and the work that you do. Thank you so much for being on the show today.
I really appreciate the opportunity because I love the work that you're doing as you're taking a really fresh new spin, and I think it's exciting. So yeah, I love it, and I appreciate being here today.
Thank you. So if you liked this episode, we want you to go ahead and hit the subscribe button. And if you want to learn more about how to crush your money goals, we have a free guide that can help you start off with your money plan. And it's at crushyourmoneygoals.com/free guide. And I hope to see you next time. Bye.